Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Checking in on natural gas and the bullish reaction to the inventory report, we topped out at 3494 and then a significant pullback from there. And if you've been watching these videos, we've been highlighting the equilibrium on the daily chart with the dump, the high of the bounce, higher low, and now a lower high. So this is what I call a top fishing play. We know our resistance is 3513. As the price approaches it, we look for weakness. If we make a bearish entry, we know to exit if that level breaks. If 3513 breaks, we are out of the bearish trade. Perfect example of a successful top fishing play. CMG was another one on the daily time frame today if you want to check that out. But lower high hit, lots of profit taking, and it looks like we're going to pull back. So if this equilibrium pattern continues to play out, and I think in the last video, just pulled up a random chart and found another example on Facebook because it happens everywhere. We're going to expect a higher low to form compared to this low here of 3145. So the supports I'm looking at are 335 and then 327. And if we bounce off either of those levels, it will be a higher low compared to 3145. And we'll look for this range to continue to tighten. And we will likely get a clear break either at the end of next week or sometime in early February. It will give us a clear break that will give us some short-term direction. So really nice resistance playing out. Lower high set and a red day will confirm this bearish reversal inverted hammer after this short-term bounce. Let's see how that is shaping up on the weekly time frame. Red, green, red, green. So honestly, with all this back and forth, I would just be looking at that daily chart because it's such a clear pattern. Don't really need much else to go off of in terms of the weekly chart, as this daily chart, higher low, lower high, is very crystal clear at this point. We're going to be all over it when it breaks. And again, it's a perfect example. You can play these levels while in the meantime, while we wait for this pattern to break, just being aware that the moves are going to get tighter and tighter, so we need to be quicker and quicker with our exits. So if we do pull back, we'll then look for a bottom fishing play, whereas we pull back, we will base it off of 3145 support, and as let's say we drop down to 320, 318, something like that, if we were to drop all the way down to that level, we would make a bullish entry and we would exit if 3145 were to break. So obviously that's looking a bit ahead into the future. We're going to keep checking in every day, so we'll be on top of it day by day. And hourly time frame, wouldn't be surprised to see a little short-term bounce after 6 big red hours in a row, but I would expect lower highs and lower lows to continue as we drop down either to 335 support or 327 support. So nice way to see that example playing out. And this is looking like a textbook equilibrium pattern following a dump. We'll check back in tomorrow and wrap up the week. Let's actually look at UNG real quick. See if it too is forming a clear consolidating pattern. And it's not, because of that big gap up, we broke that high. So let's see here, UNG, high was 861 and 862. 861 on January 12th. And we look at natural gas and looking at January 12th, that high was up, so we did break that. So let's see here. January 17th on UNG. So interesting that January 17th natural gas was a lot higher than UNG. Might be a contract rollover that went over there. I'm going to have to look into that a bit more. Either way, bearish day on UNG, closed near the low, and we're going to look to form a higher low compared to 801 and 802. So we can do the same thing on UGAS. Looking for UGAS to form a higher low compared to 2678. So we can be looking as that as a key support level. If we make a bullish entry after a couple days of consolidation, we'll be using those recent higher lows as a level to base our exit off of if things do not go according to plan. So thanks for watching. We'll check back in tomorrow to wrap up the week. I'll see you then. Have a fantastic night.